Okay, welcome back to Lunch at the Market. Hope you enjoyed the long holiday weekend. Sure was nice to wake up on Monday morning and realize that you have another day to get ready to trade. We made sure to watch Friday's fast money last night before the markets opened today. At the open, as you might imagine, we took the opportunity to get smaller on our books. That means to sell some stock and have fewer positions on. We also took advantage of the optimism to sell more covered calls on names that we'd like to keep at least a little longer. We use a covered call when the market isn't giving us the price we want to exit the trade at, but the option market will give us a better than 50 cents for the option at the strike we want. For instance, we've owned JPMorgan Chase, symbol JPM, for over a year, but with no sign of a meaningful dividend return in sight, we want to increase our return on the stock. So we sold the August 40 calls against our long stock for 65 cents. The stock is trading at about 36.45 right now, so we'd see about a 10% rate of return from the current price if we get called away at $40. We did the same thing with Fluor, symbol FLR, where we sold the August 45 strike for $150. That's a lot of premium to take in, and the move will be about 5% from the $42.50 the stock is trading at now. Speaking of big options premium, we couldn't resist doing a covered right on SanDisk, symbol SNDK. We actually took in 75 cents for the July 45 strike on SanDisk. We'll get short the 45 call again in August if we don't get called away in 11 days. If you want to sell the August 45 now, you could take in about $2.60. So you'd make $2.82 a share on the move up to $45, and then another $2.60 on the trade for a profit of $5.42, or 12.86%, for 46 days worth of work. That's when August options expire. Not bad for a day's trade. With elevated options rising on SanDisk, we're hoping to sell options against it for several months before being called away. We'll keep you updated. Speaking of updating you on options trade, we finally bought back those Goldman Sachs short 170 calls that was part of the trade we laid out in April on Goldman Sachs. So we have now sold upside call spreads twice on Goldman to take in some money on the name to offset the loss on the October 160 calls. We were able to buy back the October 170 calls after selling them for $10.91 on April 20th. We collected about 91% of the profits from that trade and wanted to take them off the table in case Goldman rallies between here and October. If so, we are long October 130 calls and 160 calls, and we can lay those upside calls back out to take in an additional premium so that we keep staying in the green on our Goldman Sachs trade. The only tricky part we have left open is the put spread we're short in October. We're still short the October 140 put spread, but this trade still has months to play out, so we'll remain patient until we need to act. When all is said and done, the only thing we should have left are the GS calls in October. If GS trades back above 145 strike we're short, then not only will we be able to keep the money from selling the spread, but our 130 put will be in the money by a good bit, and we'll have a profit there as well. So far, so good. Thanks for checking in with us today. If you want to buy something in what may be a noon swoon, certainly off 100 Dow points from the peak of this rally, we still like Chesapeake, CHK, Chevron, CVX, Toronto Dominion, TD, Total, TOT, right here. If you're not long Bank of America yet, right around $14 is a great place to start a position, or add to one if you bought it at 16. Thanks for tuning in again today, and we'll see you tomorrow. Don't forget to check out Anthony Scaramucci and our other traders on AFT by searching for Magnum Opus Financial on iTunes, or you can find the link directly on our website at magnumoPusFinancial.com. And you'll see the faces of Patty Edwards, Jared Levy, and James Altucher right there. Enjoy your afternoon, and we'll see you tomorrow.